day after. It is the day after a wild Thursday. Today is Friday, and this is the 11th of November, 2022 at about 8:25 a.m. I don't even know what to say about yesterday. What a crazy, crazy day. So what we got yesterday, and remember, by the way, today is Veterans Day, and before I go anywhere, I want to thank all you vets. I know how difficult it's been. We've lost a lot of our World War II vets. We've got the Vietnam vets, North Korean vets are still alive, and we thank you. We thank you for everything you've done. Afghanistan, it just goes on and on. All right. As we look at the markets, I don't want to call yesterday a pivot day. You can't do that. What yesterday was the first real chink in the armor of inflation. It's now rolling, and it's rolling over at this point. It can go back up, but it's rolling to the downside, and the markets ran with that in dramatic fashion, be it the dollar, which is now down into the 106.60 area. I mean, this was just a 114 market, remember that. The euro was 97. You're back to the 103 and a quarter area. Gold coming back now into the 1765 area. This is a market under 1700 recently. Copper up 11 cents today. Different reasons there. I'll go to them in 1 minute. Big move up in the energy markets. Again, I'll come there. That's all about China today. Grain markets moving. But it's other markets that are up too. Why are they up? Well, when you break the dollar down, everything priced in dollars suddenly becomes cheaper. In addition, countries that owe debt and have to repay it in dollars, the pressure comes off them a little bit as well. So what has happened yesterday is that roll in the CPI most certainly takes 75 basis point hike off the table unless come the December report, this all gets revised in some manner and the new numbers explode, which is highly unlikely. So therefore, we're talking 25 and 50 basis point hikes. Where the markets got it wrong is this is not the Fed stopping rate hikes. It is a slower pace of measured rate hikes, not as aggressive, and that's all that you have. You are still at 6.3% core inflation. Please don't lose sight of that. It's not the 2% inflation. It's 3 times what the Fed wants to see, and the Fed is determined to get it down there. This is the area where Volcker made the mistake many decades ago, and when it cracked, he eased, saying, I don't want the economy to fall too hard, I'll ease, and it came right back. Our Fed will not allow that to happen. Not this Fed chair. He's a student of what happened to Volcker. He's mentioned it over and over, and that's what you'll get. But that doesn't mean the markets don't react to the idea that maybe, just maybe, we have seen a low in the stock markets, that bottom that we recently made. It'll be difficult to get through if you keep dropping interest rates. The dollar doesn't have a reason to go back to the 114, 115 area if we start easing the amount of hikes that we're having. In other words, the amount of the hike. Instead of a 75-point hike, 25s and 50s. And yes, you'll be at 25 if you keep dropping these numbers down, but they're not going to go away 1, 2, 3. They can last until the summer, if not beyond, depending on how and where inflation becomes sticky. Don't lose sight of that, okay? Now, as I said, there's some news today, and if we take a look at it, we're going to get the University of Michigan consumer sentiment numbers. They're going to come out at 9 o'clock. They're looking for a 59.5 compared with the final October number of 59.9. China announced that it's cutting its quarantine time for incoming travelers to 5 days from 7. Now, this is very important. China does everything in graduated steps. They don't throw a light switch and go, no, we're not going to have any more quarantine. They won't do that. Plus, the cases there continue to grow in the COVID. So you're seeing them changing very slowly their philosophy, and the market's going to hope that they'll get even more aggressive in their measured case in doing away with the COVID zero tolerance policy that they have right now. They also announced today more relief for the property market. So If the economy opens up more, that's bullish on the energy sector. The property market, hearing that there's more relief, is bullish on the copper right off the bat, and that's the reason that you get those moves. Now, what does this do to other markets? And that becomes the key. So I did yesterday, in the midst of it all, I created a special report on the dollar index, and I really put a lot in this report. So you're going to get from me the trend and the chart analysis based on weekly and daily charts. Then I go into the seasonality, the price counts with it as well. I talk about the momentum as to where the market's at, what the downside counts are right now in the market, the impact it's going to have, like you just heard me say, on world events, because it is a major, major impact. It's up on my website. Now, you can only see this report for 3 business days, and then it's history. I take it off just the way I did with the S&P. How do you view it? Well, first, you can follow my finger up here and go to the website, and that's one way to do it. That is the best way for you to go visit everything on the site. You can go to iraepstein.com. Under the word research, you will see it right there, special currency report, and away you go. I told you I was going to do more of these. I am now looking for next week to put out a live webinar again. So we'll be putting that together later today. The invites will go out either over the weekend or Monday. Schedule it for Thursday, 12:30 p.m. Central Time. As you know, the seats fill, and once they're full, that's the end of it. So hope you attend. If you have questions, you can always call my staff, 866-973-2077. And please look at these videos over the weekend. I'm going to go into the weekly charts. They're going to be super important. Again, thank you, vets. It's Veterans Day. I will see you all either tonight or over the weekend as I do the weekly review of the markets. Take care.